The Hedgeless Horseman here. It's March the 11th, 2024. I recently came back from PDAC and Toronto. First of all, thanks to the sponsors. Let's look at a black screen. Now, let's look at the markets. Metal's doing okay. The general market seems to be just doing not much of anything. Crypto is still going. It really does feel like, well, I've seen the charts where never before have fewer companies been holding up the big US indices. So it's basically on the last leg. It's like there's only a few momentum trades left, but they are so large in market cap that they make the entire, the indices go up. So people feel like the times are good. And if you're in those indices, you're still kind of going up because everybody's been flocking to Nvidia and all of that. But since that has started to stall a bit, I saw the Nasdaq divided by Hue index. That basically overshot the 2000 highs, which marked the 2000 low in miners, and has retraced. And kind of around the same time, crypto started going. So it literally is like a whack-a-mole. It's like, basically the broad stock market has already stalled out since I don't know when. So everybody flocked in. The few that kept on going, and they latched on to the AI narrative, of course. So Nvidia just plowed higher. And you've seen them super microsystems or whatever they're called. I don't think ever before, well, at least not since 2000s, have people been more short-term momentum traders. That's basically it. Nobody cares or gives a F. It seems like what the value is on anything. Nobody's paying attention to price, the price to value gap. Everybody, probably at least not since the 2000s, have people been more interested in just buying what has gone up because they think it's going to go higher. So I would say the market is at peak stupidity, and I think crypto is the last maybe gasp, the last momentum trade, kind of, because these cryptos are the perfect trading sardines. Nobody has any idea what the value is. In many of them, people know they don't have value, like Dogecoin, created as a joke. That doesn't stop people from trading it because they're still volatile and can go up. So it's literally the definition of the greater fool theory. It's like you hope you're buying something that you hope you can sell to someone at a higher price down the line, regardless if it's known that it has no value. This is, in my opinion, literally the opposite to the commodity space, the resource space, because that's the basis for civilization. This is an artificial add-on, or extreme financialization, if that's even a word. I hope you know what I mean. I view these as polar opposites. The resource space, which is the lowest common denominator, and then you have the opposite side of the risk curve, which is basically nothing, and people trading nothing. So yeah, just go through. I've been shooting off a bunch of tweets today. I think that's the best favor I can do, basically. Just hammer home the common sense things, like, because I go back and I've talked about this 1,000 times. There's a big difference in future returns between holding lows, selling lows, and buying lows. They're all exponentially different, where the outcomes get exponentially different. And of course, all of these long-ass dragged-out bottoms, it's gonna feel like they will go on forever because nothing has happened yet. Are we there yet? Are we there yet? Like my boat analogy a few videos ago, think of when you were a kid. You're going to your summer house or something, maybe several hours of car ride. Maybe within the first 10 minutes, you're going to be asking, are we there yet? Even though it's like 5 hours away or something. And then 10 minutes after, you're going to ask, are we there yet? Etc., etc. At some point, you're going to be asking, let's say, with less frequency if we're there yet, because you haven't seen any proof yet. So it's like the boy who cried wolf. But by definition, regardless of how far the destination is, if we're not there yet and you ask that, 10 times later with 15-minute spreads or something, every single time, even though if the answer is no, you're still going to be closer and closer and closer by definition. But you're going to believe that it's even, let's say, in your mind, it's going to feel like we're never going to arrive, because I've asked it, 50 times now. You asked your dad 50 times if we're there yet, and yes, you have received no, and no answer 50 times in a row. So you're going to stop believing that you will ever arrive. Even though if you do that in investing in a cyclical sector, anytime it's not obvious that the bottom is in, we're not there yet. I think the bottom is in right now, for example, or recently, but still, I hope you get my point. That's why it's like, all the Peter Schiffs, etc., who get ridiculed the longer they look right. They're going to be believed less and less, even though they should actually be believed more and more the longer it takes, because a commodity sector is a cyclical sector, so it's like a broken clock. And I stated this, I think, the last video, where it's like, I think every single pop, the silver juniors and some gold juniors have already popped off the lows. Some are up like 40%. We have to, in my opinion, assume that especially from here on out, and I think, the bottom could have been in at any time over the last 12 months, because the sector was already cheap. We have to assume and operate like every single rally is the real deal. I think there should be extreme urgency of getting a position, regardless if you think the bottom is in, if it looks like the bottom is in, etc. We're at such extremes that the bottom, if it's not already in, which I think it's likely it is in already, even if that's not the case, we should assume that every single rally from here is like the opportunity is gone. But still, you see a lot of people probably, waiting for the turn to be obvious, etc. And when the turn is obvious, in my opinion, it's way too late for the big returns. When it's obvious, I've shown the charts before. It's like, when do you know we're in a bull market? You know we're in a bull market at the next high, and that is way, way too late. I'm aiming to capture a large part of the bottom to top cycle, which could be hundreds of percent or 1,000%, depends on what juniors, how lucky we are with our picks, and of course, is it a bull leg or a bull market? Most people can't cope with paper losses, especially large ones, for an extended period of time, so they stop buying. When they look wrong enough, they stop buying. If they've looked wrong for a long period of time, they stop buying. So the higher the pain goes, the less likely they are to buy, even though by definition, from a rational perspective, we should be ramping up the buying. The more wrong we look, and I'm talking sector specific here, not that if a case got busted, it's like, just because something goes down doesn't mean it's cheap. But from a sector-wide perspective, it makes total sense. If we're in a broken clock investing sector, you should be ramping up your buying the dumber you look, and you should be selling more the smarter you look. It's pretty common sense, but nobody on earth seems to be able to do it. Because there's like 2 people or 1 people buying these juniors right now, which is absolutely incredible, since probably they're the best buys since the early 2000s. But almost nobody makes any money, so that's why. It's like common sense goes right out the door, and stuff like this can go up a lot. That's just how it is. It's like, in my opinion, it's like, the market is always wrong. That's my attitude. Because otherwise, you're never going to trust yourself that it is an opportunity. If the market is always right and you taken big paper losses for over a year, if you think the market is right, that means, again, you're going to be less likely to buy because you're looking more and more stupid in the eyes of the market, or according to the market. But it could, as it is in this case, in my opinion, it's just the market getting dumber and dumber. I like this idea. If we think of our portfolios as a mining conglomerate, let's take at least our mining portfolios. Actually, that's what I said, I guess. You can pick and choose until your heart's, content. We know permitting is hard. We can pick up semi-permitted to permitted projects, or projects that have a high likelihood of getting permitted. They're not trading much different than stories where it's like a permit might be hard and it might take 5 to 10 years. There's almost no discrepancy in this market. That's why I also said before, I think basically the entire sector is a buy in some sense. But relatively speaking, I think there are buys that are like, I don't know, it's like, a trading sardine. Maybe the project isn't good, but you know it's probably going to go up at least 300 to 500% going into a decent cycle top. But that's a one-off because the project might not be that good, so that's a greater fool trading strategy. But you can be picking up legit projects right now that could certainly go up 10x and stay up 10x because they actually have good projects, a good growth pipeline, etc., etc. I'm more keen to buy them because I'm bad at trading. I'm more keen to pick up the quality, and again, the market doesn't really differentiate right now. I don't know, a store with permits or whatever, maybe that's trading at 10% premium to a similar one that's 5 years from getting permits. Maybe those permits are worth 2 times the market cap right now, but it's trading at a 10% premium. I believe there's an absolutely disgusting opportunity in this sector. I think the intra-sector opportunities are absolutely disgusting, and that's why I think now is the time to do, due diligence. Especially when the market doesn't care about it. Because, again, it doesn't differentiate really. And especially we know, multi-asset juniors, they typically only get valued based on the flagship project or target. You get everything for free, get a discount on the flagship project or target. If those peripheral assets are legit, the bargain could be obscene. Literally what I'm talking about is you can have two identically valued stories. Let's say their flagship projects are the same, and they're trading for 30% or 70% discount on their flagship assets, which are totally the same. But one of the juniors might have 2 to 3 or more peripheral assets that has some value. It's like it can be monetized down the line. Maybe a spin out, maybe a JV, something. That's exponentially cheaper than the other one, simply because the market can only focus on one thing. So if you trust Mr. Market, there is no difference in their value propositions because they have the same market caps. But that's because Mr. Market is short term and narrowly focused. So if you're not, and you can play this out, it's like, hey, this project might get going within 2 years or something. Yes, it's going to require patience, but it's like maybe one is going to go up 300%, Other one 500. That's a 200% difference because you differentiated unlike Mr. Market. So this is no time to be sleeping. All due diligence matters right now because the Mr. Market does not think it matters. Um, and just, I mean, simple stuff like this. I mean, a big real deposit will be worth billions. And the thing, of course, is that the supply demand picture for a lot of commodities looks great. So imagine what a mine would be worth after a bull run in the commodities. A mine today might be worth a real mine. I mean, a tier one would be worth several billions, but even today, I think. But let's say a good mine today is worth close to $1 billion. Let's say we go into a bull leg, and let's say it's on paper worth 2 billion, and today you could buy it for 50 million. Let's say that's how this is gonna go. When this sector gets hot and the commodity sector goes hot, people are gonna look at those NPV spreadsheets, and if gold goes to, let's say, 2,500. There's going to be people looking at NPV spreadsheets where it's like, let's say a junior has gone up 500%. Well, yeah, actually, let's say it starts at 100 million, it goes up 500% to 600 million, but the metal prices have gone up, so all of a sudden on paper that's worth 2 billion. That surely can get someone to buy. I mean, on paper, it's a bargain up to $2 billion. And you're up already 500%, and now thanks to the rising commodity prices, you get people who want to capture the 600 million to 2 billion spread. That's when the rocket engines get on board, etc. And at the very, very highest of speculative environments, you're going to see people overpaying for the current net present value because they think the metals are going to go higher. I saw this in 2016. Silver producers were pricing in a silver price that was higher than the current one. I mean, they exploded from the bottoms of 2015. Silver went down to 14, 15 bucks. I think silver went up to at least 25 bucks. But they started pricing in $30 silver. That's what I'm talking about. It even overshoots. Now we're at severe undervaluation versus current prices, especially in gold juniors. In a real hot environment, it's going to be pricing in a project that's operating at an even higher gold price than the current one. So you can imagine if gold goes to $2,600 or $28, and the juniors are going to be maybe, or companies are going to be starting to price in $3,000 to $3,500 gold. The spread in terms of returns, the delta from this point in time, at this sentiment, at these prices to that future is absolutely enormous. That's like 10, 20, 30 bagger potential. And we're probably gonna be in that kind of scenario sometime in the future. Might take a few years, but the returns would be worth waiting 5 to 10 years for. That's how absurd this environment is right now. And yeah, I think some of the buys I've done over the last 12 months, I mean, many of them are in the red now. I think I'm gonna, there's a high probability that that those buys are gonna lead to positive returns for maybe a decade or more. It's like, if you get one shot at a generational low like this, that could pay off in spades for years and years and years to come, like the early 2000s. And of course, if you curse the mining sector right now, you have no idea what you're doing. Why? That's a simple, reason. You have all the commodity billionaires, they're pounding the table like, hey, if you ever wanted to have big future returns, it would be to buy shares of the mining equities right now. Best layup they've seen since the early 2000s. If you curse that, if you think that, oh my God, I hate this sector, because they have gone down a lot, you're cursing the biggest gift since early 2000s, which by extension means you don't even know what an opportunity is. You have no sense of what price to value is. You don't know how value investing works. You don't know how the cyclical sector works. You never looked at the charts of cyclical mining equities. I'm not cursing the period we are in right now. I am at greed levels that I've never been at. This is the most ridiculous layup I've ever seen. Better than 2015. I wasn't around in the early 2000s, but people say it's at that level. So basically, if you want to make money, just being aware of this sector right now is like the greatest gift ever. Yes, came back from PDAC. It's like I have to collect my thoughts a bit. I have to rest up because like that week, those days are pretty hectic. So just to summarize, a few things first. Like I already mentioned, I still think we're near peak market insanity. I think the crypto is like the last momentum trade. I don't know what else is gonna go into a momentum trade after that. AI looks absolutely extended. The economist doesn't look too good. And again, I think that. And it's like I talked to several people at PDAC, and the ones who were investors. I mean, there's geologists and stuff who barely own any mining stocks or investment portfolio or anything like that. They're only after the discovery. But there were quite a few who are more, investor types, and a few of them they own shitcoins. I mean, they know they're shitcoins. But I think it just goes to show. I mean, they are in the mining sector, and still, they own shitcoins because they have worked. They've seen how those momentum trades work. I can't get myself to buy any shitcoins. I just hate the idea where it's like potentially I can buy resource assets right now, which could be, let's say, mines and in production. They could have mines that are still around 30 years from now, and I'm buying them at a fraction of what that is worth. I cannot get myself even to hop on a momentum trade, and it's like I don't care about Bitcoin at all. If people share that Bitcoin is up 50% or whatever, and already at what $1.4 trillion market cap. And they're very happy about that, and they're obviously in Bitcoin still because they think there's a lot of room to run. I mean, everybody buys because they think they're gonna go up a lot more. I don't care. I don't see many future scenarios where it's like Bitcoin outperforms mining equities over the next 10 years. Let's put it like that. Bitcoin supplanting gold would be the first time ever basically something has supplanted gold as the premier store of value, and I don't see Bitcoin as a store of value. I see it as yes, it's an algorithm or whatever. It's man-made. I mean, to me, it's just ridiculous. The risk reward, betting on something with 5,000 years of history versus something that's been around since 2009 or 8 or whatever it is. It's absolutely ridiculous, and you have people from who's that guy? The BlackRock boss, basically calling it a store of value. I mean, in some sense, baseball card is a store of value and all of that. That doesn't mean that it's like, anything with a store of value is like the best opportunity ever. And we don't know, it's technology. It's like a baseball card. That's not, it can't go offline. Well, it is offline. But Bitcoin, it's like you have a bunch of, a global network of servers, and you have computers that needs to run to even have it working, and, the hash rate and stuff. I just don't see there's too many risks. So, you see this more and more. I listened to John Hathaway again. I think it was interviewed at PDAC, where he said, miners to metals dislocation. Well, I think the title was something like dislocation is never seen, meaning that's like, regardless of if gold is undervalued or overvalued right now, gold miners, for example, have never been more undervalued. So that's a speculative discount, which is, I mean, why it's so absurd. And I talked to a few people at PDAC with this. I mean, my view is like, yeah, okay, either, it's signaling that either gold is gonna crash or miners are gonna go up and close that gap. Okay, but when you think about it, if you buy the miners pricing in a crash, if the crash happens, you paid fair value. You didn't overpay because it priced in that bad future scenario. So the worst case is that you paid crash prices and that crash came, which means you didn't even overpay. If the miners go up, well, let's put it like this: if gold does not crash, you underpaid by the largest degree since early 2000s. That is the most absurd risk reward I've ever seen. It's absolutely insane. It's like, tails I don't lose, heads I win a lot. You would never see, I mean, in poker, you never get stuff like this. This is absolutely absurd. Yeah, so still lacking of interest in the sector, and a lot of people, I tweeted this at the time, a lot of people were questioning gold's run. But it, at least has run like $100 higher. But that's good. Again, more time for due diligence. The better due diligence we do, the higher our future returns are going to be. More time to evaluate. We get, again, it's like at these times when, again, the market doesn't differentiate between stuff, we have time to evaluate, which increases future expected returns. Easier to get shares at these stupid prices, and it's not easy. I mean, I'm not out there pounding the table too much on any single stock, because all I like are ridiculous buys, in my opinion. And it's hard to even buy stock right now at these prices. So I'm no Mother Teresa in that sense. It's like, hey, I want even higher future returns. So if somebody is okay selling, especially the juniors I really like and want to buy or buy more of, go ahead. Do that. And then we can compare our portfolio returns 10 years from now. Again, higher future returns. So jurisdictions, I mean, I talked to quite a few about jurisdictions. I'm not a geopolitical or political expert. I mean, some thought that's like, the South American, Latin American countries that are, maybe on the down path, but at the same time you had a bunch of people saying like Peru and Chile, etc. They're not gonna. I mean, they can't really kill the goose that lays the golden eggs. So it's more about short-term cycle kind of thing, and I can see that. I mean, but what we do know is still that we know that jurisdictions, especially the sketchier ones, the more socialistic, I mean, they have a tendency, if metal prices go up, and unfortunately that's when you want to keep your assets the most, of course, that might be when they, do something about it. They take it over. They get too greedy. That's a problem. That's a legitimate problem. Nobody knows exactly how it's going to go. But I keep returning a bit to, Thomas Kaplan's idea that when shit really hits the fan, there's going to be a bubble within the bubble. There's going to be people are going to tend to flock to the safer jurisdictions, because let's face it, this was maybe a year ago I talked about this. I mean, there's a fear of missing out. Then there's just fear. of paper losses. It was like, imagine if we go into a scenario where there's like fear of need. Because if I understand correctly, GLD ounces have gone down, and we're still seeing near record appetite out of China. So what happens in the future where it's like, because bear in mind that the Western investors are not even in yet. They have probably never been more out. Because otherwise, why are they buying up crypto? That's not risk off type of thing. That's the biggest version, let's say, of fiat speculation. Well, they're speculating on something even more artificial than fiat. So in the Western minds, I mean, how many people have experienced, especially in the U.S., have experienced, the death of the dollar? Well, they haven't. So if there were any people that wouldn't think that gold has merit, it would probably be the country that has had the strongest fiat for the longest time, which would be the U.S. But the U.S. is still the biggest GDP. It's the largest economy. I think maybe China has overcome it, but it's like it's the biggest financial. It's like market, and you can see the market cap divided by GDP. It's enormous, right? So there's an enormous amount of capital in the U.S. and nobody yet seems to be that worried about the purchasing power of the dollar or the system overall. So what happens if the gold and silver ounces are getting drained as we speak, without any participation really from the US and the West? What's going to happen when something happens, which inevitably is going to happen, that makes them want to go risk off and actually buy tangible assets like gold and silver, which with the longest history of capital preservation, store of value? Is there going to be enough gold and silver when everybody comes running? I don't think so. Then we might go into, again, a fear of need. So what do you do then? Let's say we fast forward and it's very hard because I've seen, coins, etc. in the coin shop sell out. What do you do if you're very scared? Gold prices, silver prices are going up. You're getting very scared. Things are happening. World markets are in chaos, and you want to protect your wealth. Let's say by that time crypto is absolutely tanking and all of that. The AI, regardless if it's a bubble or not, it's taking in water, so everything is basically taking in water. And you hear about, they're starting to develop shortages in physical metals. And maybe the central banks of the world are buying even more to boot. So let's say you're sitting there. You're afraid of bank collapses maybe. You're afraid of the currency going down. Because now you actually see them talking on CNBC or whatever about stuff like this. And you can't even buy physical gold and silver. I don't think it's a stretch to imagine that money is going to go into the gold and silver mining space. Because at least you're buying the metal, it's just that it's still in the ground. Right? You're buying future store of value in situ. And let's say that happens. Are you most likely going to be buying a gold mine in Zimbabwe, for example? Or are you going to be buying ounces in the ground in the Western world, like Australia, Canada, US, Scandinavia, maybe parts of Latin America, etc.? I think so. Because when you're very fearful, you see risks everywhere. Like we're seeing now. When the mining sector is when the investors are very fearful, have been very fearful, they think it's going to go down to zero. Every single negative headline, negative news release creates a selling event. A decent news release can also lead to a sell-off. It's only the top 1% of news releases really that's received market, buying. which speaks volumes. Again, that everybody's looking for reasons to sell because they're fearful, they don't see the upside. When people are truly fearful, I don't think they're gonna feel too good about buying fleeing, let's say. Again, not from a due diligence price to value perspective like an investor. When they're just fearful, they're gonna look for the path with the least amount of fear, and I think that's gonna be Western ounces in the ground, beta, and gold miners, obviously Barricks and Newmont, etc. So if I can front run that too, that kind of environment, which has not happened. I mean, the more things. I mean, as investors, the only thing we really should be doing, or what it's all about, is like front running news releases and differences in emotions. We don't know exactly how things are going to play out, but I can see a future where the jurisdictional premium is vastly different than today. If that gives me another free upside risk, I'm all for that. And personally, I like the idea of owning something where I get to keep it. Especially if it's a legit project. If it's a legit project, if they have a shot of having a legit project, you want it to be somewhere where you get to keep the fruits of that labor. So yeah, I mean, building your own mining conglomerate now, I mean, I really like that idea because, like I already talked about, the market right now is not functioning, so it's not really differentiating. It's not fairly pricing in the risks and upside risks. I mean, you can buy stuff that's like millions of ounces in the ground, selling for less than sunk cost, which what it costs to prove it up, and you didn't even need to spend the years of proving it up. You have already passed that dilution, of course, as well. You can buy it for less than what it costs. It would save you. You get free amount of years, and you don't have to wait for them to prove up the ounces. They've already been proven over several years. You're buying that. You're buying all the capital expenditures already spent. I mean, what it would cost to redo it at a discount as well. I mean, it's absolutely ridiculous that this is like legal stealing. Somebody paid up that money for them to drill out those ounces, had to wait several years perhaps for those ounces to be drilled up. We can come in here right now, buy that for less than what it costs to prove up, and didn't have to wait a single day for the ounces to be proven. That is the beauty of this sector and why it is so brutal. Some other person forked up the money, had to wait for years for that money to be employed, and used for drilling equipment and etc., with no even guarantee of success. But we can look at the cards face up. This is what they have right now. Took years to do, tens of millions to do, and we can buy that with no risk because it's already proven. Somebody else took the risk, the time and the money. We can buy that for less than what it cost. That is absolutely obscene. That is absolutely obscene. It's like somebody throws in capital into a machine that is going to spit out a car, and you have no guarantees it will be a good car, how big the car is going to be, how valuable the car is going to be, and all that. And it took, let's say, 3 years for the capital thrown into the machine to spit out the car. Now we're seeing the car have come out of the machine. We can ascertain its value. If we might know, okay, this actually functions. It's probably worth this much. We know what it costs to throw in there. And again, we're not risking getting any a three-wheeled car or a one-wheeled car because we see what they got from the machine. And we can pay less than it cost and way less than it's worth. And we don't have a 3-year waiting period to get the car. from a risk reward perspective, we are not even the same dimension as the person who actually threw the first capital into the car, who funded the process. It's absolutely ridiculous how this sector works. That in terms of no-brainer buys, it just can go up absolutely exponential at a cyclical low. So all of these things matters and will matter. The beauty is that, again, the market doesn't care right now. Because people are not selling right now because they think something is overvalued. They are selling for whatever reason they're selling. They need the money, they're scared, they don't think it's going to go up, whatever. That's not a good reason to sell, obviously. That's the worst. But that's how most people function. So if we can see through the bullshit of the market and see that, okay, somebody's selling this, let's say it's a good news release, and you're sitting there thinking, well, I think they added 50% of value. Well, I think they added 50% of their market cap in value. Added, maybe it was already selling for, it should be up 100, 200% already. Now you get a 50% boost to that. So now it should be going up, 350% or something. Because nobody bought or someone sold. That is, those are just absurd changes in risk, reward, and value propositions. If you get an extra 100%, let's say, because somebody doesn't appreciate the news release or sold off the stock where the case was unchanged, if you get 100% extra future expected returns as a buyer, that's years worth of returns. Thanks to the sector being this dumb right now. So it is absolutely no time to be lazy. Absolutely no time. If you believe the market, you're never gonna win big. You have to see through the bullshit, look at what they actually have, come up with some scenarios or some value proposition, some base case. And now I don't think it's hard to see base cases where it's like, oh, I think this is, might be 500% undervalued in some of the really good stories, especially if it's a probable growth story as well. It's absolutely insane. Well, I think this is going to be part one. Then I'm going to go over more companies later. Thanks for listening. Consider me biased if I talked about any juniors or companies. Some might be banner sponsors as well. This is not investing advice. Do your own due diligence and all that. Thanks for listening. Bye.